Hello, and welcome back to Explain the Charts. Today, June 18th, 2025, we're breaking down the USDCHF, looking at both the latest news and what the charts are telling us. Recent headlines indicate the Federal Reserve is maintaining its current rate policy, a detail will correlate with our chart analysis. Geopolitical events, particularly those involving the Middle East, continue to exert influence, creating volatility we need to account for. Now, let's dive into the charts and see how these factors are shaping the USDCHF. Looking at the one-day chart, we can see the overall trend has been downwards for the past few months. There was a high near 0.92 in April of 2024, and it has since fallen over 4,000 pips to the 0.81 level where we are today. We can see more recent consolidation. A potential support level seems to be forming around 0.81. We need to see if it will hold or break. Let's zoom in on a more recent period. Let's take a closer look at the daily chart between May 15th, 2025 and today, June 18th, 2025. We're seeing a defined downtrend here. The USDCHF pair tried to recover in late May, but failed to break convincingly higher. This is more bearish confirmation. We need to keep our eye on any potential reversals. Switching to the 1-hour chart over the last few days, we can see more clearly this most recent downwards action. There was an attempted breakout to the upside, which appears to be failing. Now, let's narrow our scope to the 15-minute chart to analyze intraday movements for more short-term trading opportunities. We can see consolidation has been taking place for the last 18 hours or so. This consolidation is likely to break soon. Whether it will break upwards or downwards will determine whether or not this consolidation was a retracement on the path to further losses or a true sign of a bottom. So, what are the key levels to watch? The 0.81 level is significant as it's acting as the primary support. A break below 0.81 could signal further downside, potentially targeting 0.80 or even lower. On the upside, a sustained break above recent highs near 0.817 would be encouraging for bulls. However, given the overall downtrend, any rallies might face resistance around 0.82. Remember to keep an eye on economic releases and geopolitical updates, as these can quickly shift market sentiment and impact the USDCHF. In summary, the USDCHF is currently trading in a delicate balance. The odds favor a move down at this moment. A likely scenario is a break below 0.81, leading to a test of 0.80. That will become more likely if economic news weakens the dollar. A less likely, but still possible scenario is the upside break and the beginning of an uptrend. This will become more likely if the dollar gains strength relative to the Swiss franc in the coming days. Keep an eye out for any major news events, which could spur either the bulls or the bears. That's all for today's analysis on Explain the Charts. Happy trading!